Good morning, mi familia. So before we get jumping into the prep video here, tonight, 4 p.m. to 5 p.m. Central, that's 5 p.m. to 6 p.m. Eastern for all my East Coast peeps, John Carter from Simpler Trading is going to be doing a live webinar. So I'll put the link for the webinar in the description of this video, but definitely check it out, guys. Dedicate an hour of your time tonight to learning from what I think is one of the best options traders out there. So I'll have that in the description. Don't miss that. And everybody in the Focus Trades group, y'all better be in there. But for the market right now, guys, it kind of sucks. And what sucks about this market is that we're finally starting to get a handful of really good looking setups. You've got FedEx, you've got Roku, the tech names, they're squeezing on all the lower time frames. So many beautiful setups, but we're getting these setups at that point in time where the market itself has already made that move. It's already made its good, healthy move. So we got the 21 EMA, and then we got the Keltner channels measuring 2 ATRs away from the mean. We know, and I think we've learned this year, the market can go from extended to really extended, and it just keeps on going and keeps on going. But thinking in terms of probabilities, we typically don't want to be getting too aggressive and jumping into new long positions once we've made that 2 to 3 ATR move away from the 21. So think about the month of October. The month of October, at least the early part of October, was great for us traders because at the same time we were getting presented with squeezes in Salesforce, in Chipotle, in DocuSign, in NOW, in Spotify, in Amazon, you name it. At the same time we were getting presented with a bunch of good looking squeezes, the market was also in a squeeze starting its move. Right now is a little bit different. The market has already made its move, and now we're finally getting all these good looking positions, or these good looking setups rather. So I think the major thing to keep in mind, guys, is that while FedEx is a beautiful looking daily squeeze. Now, a couple of us in the group actually traded this and took some profits off the table yesterday. But the major thing to keep in mind is that this is a good looking setup, but you need to take into consideration the context of the market. And the market being a little bit extended right now, you need to take that into consideration. You don't want to blindly jump into something like FedEx just without a good understanding that potentially the market might have already made its move, and we might start kind of running out of gas here. Now, FedEx might just keep on going without the market, but more often than not, once the market begins that pullback to the 21, is a general statement, a lot of stocks are going to follow it. So I think that's really important to keep in mind here, guys. So that kind of has me on the fence as far as jumping into new long positions, and I would much prefer to take that Roku daily squeeze, to take that FedEx daily squeeze, whatever the case may be. I would much prefer getting those entries and those beautiful setups after a nice pullback for the market. Now, it doesn't mean we're going to get it, but I think for risk management right now, find those good looking setups, but just take into consideration where the market is. Maybe you decrease your position size. Maybe you still take that setup in FedEx or Roku or whatever setup you think is attractive right now, but maybe instead of getting aggressive with naked calls, you go with a modest put credit spread. Our job in any environment is to find the best looking setups that have the highest probability of making a move in our favor, but we have to trade them in alignment with the overall market. Where the market is in relation to that 21 is really, really important. So that's my mindset right now. We did take a couple of entries there on Monday. Most of us took them off the table yesterday. We got a little bit of follow through. I think that's all we needed here. So we got into Roku there on Monday. You had a bunch of beautiful squeezes on the 4 hour, the 2 hour, the 1 hour, you name it, right on top of that 21 EMA. So I love that trade. The 21 EMA kind of serves as a launching pad, so to say. And now when you're building up all kinds of energy on those lower time frame squeezes, you tend to get that nice push we're looking for. So we jumped into a couple put credit spreads on Roku on Monday. Personally, took those profits off the table yesterday, and I did the same thing with FedEx. You had a bunch of beautiful squeezes right on top of that launching pad, the 21 EMA, taking those profits off the table yesterday. I also closed my Amazon Iron Condor. Now, there was no reason as far as the price action to get rid of the trade, and for those of you guys in the group who might still have the Condor, where we sold the calls at 3,600 and sold those puts at 2,900, feel free to continue to hold this. My mindset was, we got about 30-ish% of our max profit. The market, rather than, as far as what's the next move for the market, I think personally a little bit more likely that we begin to pull back versus just continuing to explode from here. So I'm thinking on that Amazon Iron Condor, the call side was in great shape. We finally got a little bit of profit coming in from the put credit spread side. Cut the trade off, take the easy money, and then get the heck out of there. Another position I closed yesterday, and I know I covered this with y'all in yesterday morning's video was that put credit spread on the NDX. So after the election, we get this crazy move here. You get extended right on back home to the 21, and right here on the, what day was that? What day was that? On the 11th, jumping into a put credit spread, selling to 3,600, or I'm sorry, 11,600 strikes. Took that off the table yesterday, guys. So those are the positions we took early in the week, last week, closed those yesterday, and then one position personally that I put on yesterday is a call credit spread here on the SPX for December 4th expiration, and I sold calls at 36.65. 36.65. So the mindset here, guys, is, hey, I think we're extended. I think it's a little bit more likely that we begin to kind of take a breather, if not pull back a bit ahead of Thanksgiving into the holidays. But if we do continue to pump here, at the same time we have all these good-looking setups, I got a little bit of an insurance policy. Say the market really continues to get going here, I got that call credit spread that's going to bring in some nice premium if that move kind of fails. So I can take that position in Roku with a little bit of comfort knowing that if everything kind of falls apart here, I might take a little bit of a lick on Roku, whatever the case may be, but you got some premium coming in from the call credit spread. So that's one of my only open swing positions. And then the other position that I got filled on pretty much right at the bell yesterday is an iron condor here for NIO. So NIO announced earnings last night, and the market makers are pricing in a $7 move. So I placed an iron condor here, guys, going a good $10 out the money, basically placing the bet that we're not going to wake up this morning to a bigger than expected move. So if we take a look at the NIO chart, they're pricing in a $7 move. She closes around 46 yesterday, and this thing is basically dead flat this morning. So there's going to be a total premium crush, which, if you bought those options, sucks. If you sold them to somebody else, this is perfect. So as soon as that bell opens this morning, those puts, they're going to get crushed. And then those calls here, they're going to take a good beating as well. So I already have an order set to lock in a good 80% of the max profit. And on these kinds of trades, guys, you're not looking to, grow the account. I risked about $2,000, which is a modest level of risk, looking to make a good $500. So you take a really small chunk of your capital, you set it up in a high probability fashion, looking to get a good solid 3-to-1, 4-to-1 risk reward ratio, and it really shouldn't make or break you. My mindset with these and what makes them a little bit fun is that when they work, I take my girlfriend out to dinner with the profits. So that's a scoop there with NIO. And outside of this, guys, for those of y'all in the Focus Trades group, I'm not going to be with you guys for the open this morning. I got some stuff to handle. But we still have the same setups to focus on. As far as technology, don't force the issue, guys. Believe me, these are beautiful setups. You got 4-hour squeezes on Microsoft. But let's not fight the squeeze. Not looking all that hot, energy leaning to the downside. Say Amazon. Amazon, this total shitbag. Good looking squeeze. There's nothing happening here yet. So I think what we can all agree on is you've got Apple, you got Facebook, you got Google, you got Amazon, Microsoft, all squeezing on the 4-hour, the 2-hour, the 1-hour, the 30-minute, you name it. I think it's a safe bet, guys, that sometime soon over the next week or so, we should get a bit of a directional move here for these tech names. Simply because we don't tend to sit in a squeeze too long before we make that move. All we're doing inside the squeeze is just building up some crazy energy, and at some point, that energy has to get released. However, we really don't want to have a bias right now as to which way is that energy going to get released. So just based on the SPY being extended and based on the fact that tech has been getting just absolutely no love, be patient. Let these squeezes continue. Understand that you're not going to miss a good trade inside the squeeze. Let them get tight, let them build up more energy, and at some point soon, the energy should get released. If the market continues its crazy pump, hey, maybe the squeeze is fired to the upside. If the market does begin to pull back down towards a 21, maybe these squeezes fire to the downside. So I think in this environment, guys, we want to be really patient, and I think more important than trading and trying to make money, let's have our peace of mind intact for the holiday season. Nobody wants you at the Thanksgiving table all caught up in your emotions because you overtraded or you chased something. Put things in proper perspective during the holiday season. Find good-looking setups. Take them in alignment with the overall market, but keep your peace of mind intact. So I appreciate you guys for watching. As always, if you haven't already, go ahead and subscribe. Focus Trades members, I will see you guys at 3 p.m. for Power Hour, and then we got the John Carter webinar tonight. So shaping up to be a good Wednesday. I'll talk to you guys tomorrow morning. Be safe.